Oliver, looking at Ethereum, especially when you look at these 3 weekly candles here, which are positively green, has Ethereum possibly been able to chip away at Bitcoin's dominance a little bit?
That's exactly right, Johanna. We've had 3 really good weeks with Ethereum. Whenever the market moved upwards, Ethereum was 1% to 2% ahead of Bitcoin. And when it moved downwards, the decline was significantly smaller than for Bitcoin. You could see that, it was obvious. And at the end of the day, that means that Bitcoin's slight decline in dominance is mainly attributable to Ethereum as the second largest coin. And the pump gang, i.e., those who are basically saturated with Ethereum and want to push Ethereum, are also appearing on all channels at the moment and are ultimately ensuring that we have a nice movement here. But at the end of the day, all altcoins will be happy when, pushed by Ethereum, we enter an altcoin rally. This program is brought to you by Next Assets. Crypto, simple, secure, direct.
Dear viewers, the spark of hope from the Federal Reserve is balm for the souls of crypto investors. Of course, a 25 basis point interest rate cut at the December meeting is considered priced in, and that is exactly what is expected. However, this time around, the press conference could be exciting in terms of liquidity, and we will, of course, be watching this very closely over the next few minutes. Jerome Powell's current predicament, particularly with regard to the US economy, will also be a topic of discussion, as will the brands and range of Bitcoin and altcoins. We will be discussing this in the next few minutes with Oliver Michel from Tokentus. It's great to have you here, Oliver.
Hello.
Oliver, tomorrow, Wednesday, 10 December, things could actually get exciting at the Federal Reserve press conference. As I just said, a rate cut is already priced in, but the big issue, liquidity, could actually come up again. Do you expect a reversal tomorrow, a trend reversal, or even the first signs that could be decisive for this week and possibly the rest of the year?
Yes, Johanna, it's actually a shame that our crypto markets in particular are not being driven by good operational news these days, but rather that the Fed's decision is tipping the scales. And at the end of the day, the Fed will determine the winner in the game between the bulls and the bears. And we may see a hint of this as early as tomorrow during the meeting. Not in terms of saying we're lowering the base rate by 25 basis points, but as you already said, what about the money supply? Because the Fed has 2 tasks. It decides on interest rates and it controls the money supply. And it would be nice if we got a positive answer on that tomorrow. In short, we've been saying this over and over again for weeks and months. It's all about liquidity. And the one controlling liquidity is the Fed. And that's why tomorrow is going to be very exciting, at least in terms of expectations. Whether our Jerome Powell will make it exciting and interesting is another matter entirely.
At least you can get the popcorn ready. Let's take a look at the Fed Watch tool. Almost 90% of market participants expect an interest rate cut of 25 basis points. Not much has really changed, especially compared to yesterday's view of the Fed Watch tool a week ago. Then it continues. At the moment, only in quotation marks, 2 interest rate cuts are priced in for 2026. But that can change quickly, can't it?
Yes, hopefully. You just said it yourself. We're talking about 87.3, which is the nearly 90% probability that the market sees an interest rate cut of 25 basis points. Last week, I believe it was 87.4. This lack of change shows what has happened in the last 7 days. Namely, nothing. We'll see that in the charts in a moment, especially in the weekly Bitcoin chart. There was some labor market data last week that wasn't so rosy, but it actually confirms what we've been saying for months, that the labor market is continuing to decline and the unemployment rate is rising. We also had PC data last Friday, i.e. inflation data. The inflation data that the Fed actually likes to evaluate, especially the core area. And then you see, yes, it went down slightly from 2.9 previous to 2.8 expected, and then 2.8 came in. So from that point of view, those were figures that had been expected, but they were also September figures, which we know are already some time ago. In that respect, it was actually a quiet week. The calm before the storm fits quite well here, which will hopefully blow up in a positive way tomorrow.
Unfortunately, that wasn't a champagne cork popping, but Joe with his breakfast bag craving attention because all the focus here is probably on our interview. We'll have a serious word with him afterwards, in the back. But as we just said, in addition to interest rates, the Federal Reserve or Jerome Powell and his team also have the task of controlling liquidity and the money supply in order to influence the economy accordingly, in this case positively, which is urgently needed given the detailed circumstances in the US. What options does the US Federal Reserve have in terms of the money supply?
Yes, as I said at the beginning, there are two screws they can turn. One is interest rates, which they can keep up or bring down. We're expecting 25 basis points. It would, of course, be great if they decided on 50 basis points, as they did last year, for example. Last year, we had 25, 25, 50. Perhaps that will happen again this year, but I wouldn't put too much hope in that. Instead, I would place more hope in what you just mentioned. Namely, how does the Fed control the money supply in the US? We know that there is the normal state, and there are QT and QE as the two exceptional states. Last week, we described the normal situation, which simply consists of the Fed being supplied by primary dealers, i.e. the big banks. Government bonds and MBS, the mortgage-backed securities, i.e. mortgage-based bonds. And the moment she buys them, the money flows into the market, and when these two, the government bonds and the MBS, expire, these primary banks use the money to buy the assets back from the Fed, and the money flows back. So boldly, it takes it back and does exactly the same thing all over again. So that's the cycle. And what we actually expect now, after QT has ended, is for the following to happen. QT means that the moment the government bonds or MBS, the mortgage-based securities, expire and the Fed effectively takes them back, it means that it not reinvesting all of the money it collects, but holding back money via a cap. And in recent months, that amount has always been between 35 and 45 billion US dollars. And it is precisely this amount that is now being released again, so to speak, by the end of QT. This means that with all the money they collect, when the primary banks redeem these government bonds and MBSs, they can now reinvest all of this money and buy more. That is exactly what they are doing these days. And the whole thing is being fueled by the fact that the repo, which we have also discussed in detail, the repurchase agreements with the banks have raised the corresponding sums. So we are not yet in QE. QE means that the amount of US dollars used to buy bonds and MBS is significantly increased. We don't have that yet, but we have, so to speak, the cap that has been removed, and we have the increase in repo, so that the first capital measures are already taking effect. And I could well imagine, hence the next line here, it is always Paul's dovish and hawkish behavior, as they say, when he moves in this direction towards an expansionary monetary policy. Yes, we may now do a little more in terms of repo. We may also do more in terms of purchasing government bonds and MBS. If he were to get carried away and say something, then that would of course be the so-called hopium for everyone. And sure, we will have a few volatile hours before and after that. But I would hope that tomorrow's meeting is not just a lot of hot air, as we said last week, but you are right. That it is right, that it is trend-setting, and trend-setting upwards.
Of course, you would want it to move in the direction of expansionary monetary policy so that the markets naturally have more liquidity available again. Dovish, i.e. pigeon-like, naturally means expansionary. And hawkish then means restrictive. This means that the market has less money supply available.
Exactly, that was basically the QT we had all along. Of the money they collected, the amount automatically diverted via the cap was written off, and only the remainder above the cap was reinvested. And so, month after month, they took a cap and pulled money out of the market, which ultimately led to this tricky situation we now find ourselves in, where, yes, there is a lack of liquidity in the market, which they now want to pump back in.
This week, labor market data will also be released today and tomorrow. However, this is not the data that we always keep an eye on or focus on in the form of non-farm payrolls. Nevertheless, it will of course be exciting to see which direction the labor market develops overall, because if there continues to be weakness, then this would naturally give Jerome Powell another reason to take a more dovish stance. Another indication could be the significant decline in demand for trucks in the US. We have discussed this topic before. Now, one could say that we simply bought or ordered fewer trucks. But this naturally has a significant impact as a first indicator, or one of the first indicators of the state of the economy. In what way?
Yes, Johannes, that's right. So we have something here that is absolutely positive when money flows into the market. And our plan is that everything will go up again in the short term. Why? Because this money helps to reignite the euphoria. But we also know that at some point the rollover will come, and rollover means that at the end of the day we are heading into a recession, we are heading into a bear market. And there are already signs of this today, and we had already mentioned this very aspect as a very mundane indicator a few weeks and months ago. This has now been confirmed. The moment fewer trucks are ordered, it means that less food, less building materials, and fundamentally less goods are being transported. And the decline in the purchase of trucks was on a scale that is typical of recessions. Should we say, that means we have had nothing but declines in the last 5 months. And we have had a 50% decline in the last 3 months relative to the 3 months before that. And as banal as the indicator is, as banal as this statistic is, it is ultimately very meaningful. That means that when it comes to looking for reasons why such a rollover might occur, why we might be heading into a bear market, then this is something to pay attention to, because it is a real warning sign.
Another warning sign, or a possible warning ahead of the 19th, 12th, is also in the House, namely the view towards the Bank of Japan. If, after what seems like an eternity, the Bank of Japan were to change course and actually turn the interest rate screw, in this case upwards, it would naturally jeopardize the well-known carry trade. And we saw this happen in August of this year, causing the markets to falter considerably. Is it better to have such an important indicator or an early warning system?
Yes. That was on the 5th of August, I believe. That caught us relatively cold at the time. And that then led to a corresponding setback. This authenticity notice has been on this slide for 3 weeks. So in that respect.
Yes, but come closer.
Yes, but forewarned is forearmed. So now we know what the problem is. It is assumed that they will raise the base rate in Japan on the 19th of December. We can prepare ourselves accordingly. We know that investments in Japan are now more in demand due to the higher interest rates. Especially the safe investments at the moment are more in demand. So the Japanese are withdrawing their money from the global markets, and the Japanese have flooded the global markets with their cheap money, including the crypto markets. They are now gradually withdrawing it and investing it in their own country. We know that. We can prepare for it. It will certainly have consequences, but in my personal opinion, not the dramatic consequences we saw in August, when we were completely unprepared for the problem.
Oliver, let's take a look across the pond at the US indices. Today, however, we won't be looking at the Nasdaq as usual, but at the Russell 2000. Why has the tech sector lost its importance at the moment?
Not really. The major US indices are all moving in lockstep, but one is standing out a little bit at the moment. That's the Russell. And we've already included the Russell many times. Why is the Russell so interesting? The Russell combines small companies with slightly riskier companies. It's a broad index and, yes, risk assets comparable to our cryptos. That's why it's interesting to us. And yes, we have strong correlation between the Russell and our cryptos. And the Russell these days threatens to break through upwards in a positive sense. And where it stands and what opportunities we have there, let's take a look at that here. That means we have the 21 high from the Russell here. It tested that for the first time exactly 1 year ago. So that's our one. Then it went down into the target reset. And we always say, similar to the NASDAQ, that this is the fifth and final leg. Then we saw the correction here, similar to the NASDAQ, which is what we wanted. In this case, it was 10%, and since then it has been marching upwards wonderfully. Exactly what we want. That means with the prospect of more and cheaper liquidity from the Fed, so thanks to these relief measures put together by the Fed, it has developed positively. It has already reached an all-time high here at 2,548 points. But you can see that it is always hovering around the old all-time high. Sometimes a little above, sometimes a little below, but it has now been back at that point, just a few points ahead. And you can possibly see a small bull flag forming here over the last few days. And I have high hopes in connection with what may come tomorrow, that in the coming days, well, maybe there will be a sell on good news and it will fall briefly, but then it will shoot upwards, that the rattle will shoot upwards. And I would consider that a first good sign for the development of our cryptos, because what the rattlesnake is doing, which is comparable to our cryptos, is what our cryptos could imitate. And of course, clearly NASDAQ and S&P will also continue to shoot up just because we don't have them with us now. NASDAQ at 27, S&P at 7.5. And I can imagine that a rattle like this could well shoot up to 2,650, 2,700 points before we see the final all-time high there. And a rollover is initiated. But from that point of view, it looks great. Good first sign. The rattle is leading the way, and our cryptos could follow suit.
Let's just gather the good omens and continue with the DXY. This means that the strength of the dollar is measured here against the other major strong global currencies. Only when the dollar loses strength could this be another positive sign. Because if the dollar loses strength, or rather, if dollar-based investments lose their appeal due to a weak dollar, this could naturally increase their appeal, for example, even for cryptocurrencies, which are also on the decline here.
Yes, as you say, liquidity seeks out the best investment. If the dollar is strong, dollar-based investments, as you said, naturally have the edge and are real competition for our cryptos. And if the DXY goes down, dollar-based investments will no longer be quite as interesting, and then our risk assets may become interesting. And we said we would monitor the DXY on a weekly basis. Then might fall after all. I've plotted the DXY against Bitcoin again here, and you can see that the DXY is falling. Bitcoin is rising. The DXY is moving sideways. Bitcoin is moving sideways. The DXY is rising, and our Bitcoin is falling. So now we've reached the point where the two are diverging again. And our goal now, of course, is for it to go down to 96, 97 points. That looks pretty good too, Johanna. We had an initial higher low on the way up and then recorded a lower high below 98.91. So that's what we want in terms of a trend reversal. A small beer stain may be forming here, which will then break downwards and achieve exactly what we have in mind, the 96, 97. And if this goes down, then our Bitcoin will go down. Hopefully upwards. And that would be, as you suggested, the second. Good sign for the development of our cryptos.
If that doesn't work, you can always auction the picture on the art market and call it alien on the dissecting table.
Motorcycle.
Okay, you see something different. I would have seen the alien here because of the legs and on the... Let's leave it at that. We can look elsewhere to see if we can turn the whole thing into liquidity. Let's stick with collecting the positive signs and take a look at Bitcoin dominance. If Bitcoin dominance falls, there is a chance for altcoins to take off or to really step on the gas, at least for the time being. Will it continue to fall?
Yes, is Bitcoin dominance in the weekly chart, in contrast to the two ahead, Russell and DXY were in the daily chart. That was the all-time high of dominance. Then it fell down here, and the first significant statement bounced off the 786, the 702, and the 618. So dominance did not manage to sustain any of the three retracements. And I evaluate what we see here. In the sideways movement, also in our sense as a kind of beer stain that breaks out downwards, that's exactly what we want. Comparable to this sideways movement, only it takes a little longer there. The moment Bitcoin's dominance falls, but Bitcoin still slowly increases in value, it naturally means that altcoins have to gain momentum and that we have a dip in dominance here. This is definitely due to Ethereum doing a really good job these days. When the market is rising, Ethereum is ahead in terms of performance. And when the market is falling, Ethereum does not decline as much as Bitcoin. And Ethereum, as the second largest coin behind Bitcoin, has to lead the way if we want to see a rollover of Bitcoin's dominance. I imagine I can already see a little bit of this here, that we are on the way down. And if that is the case, and it actually looks quite good, then we have what is essentially the third good omen for our cryptos.
If we combine these three signs and look at them in combination, how should we assess the situation at the moment, particularly with regard to the two camps we mentioned earlier, bear market and bull market, or bearish and bullish?
So these three, I would say good omens. In this combination, you cannot see when our cryptos, and especially our altcoins, are in a bear market. That is essentially the key message. Of course, there is still a lot of uncertainty in everything that could happen. But I believe, based on what we have gathered here, I believe we can say that we are on the verge of something big. You can see everywhere that we are at the point where we could take the decisive step forward. And as I said, these three insights you don't gain and you don't see when our crypto market is in a bear market. Therefore, the opposite is true. We are still in a bull market.
Let's see how Bitcoin is doing in this bull market. We had or hoped to see that the higher low at 85,000 US dollars is considered set.
We hope so, yes.
And then what happens next?
We'll take a look at that in the daily overview in a moment, but those who follow us regularly, Johanna, will see that not much has actually changed here compared to last week. This is the weekly chart with the higher lows, with the last higher low, the purple line, and the hope that the 85,000, that is the next higher low that is forming there. It is impossible to say with certainty. Well, I wouldn't bet on it, not 100%, but there's a good chance that it could be. I just want to come back to what we said at the beginning, specifically in connection with the percentage on the FedWatch tool. It hasn't changed. And if you look at this here, the penultimate candle with the long wick and the long fuse and hardly any body in the middle. Yes, that was last week. Nothing has happened since last Tuesday. And this week, that's the little red one on the right. Yes, not much has happened yet. Everything is still waiting. The Fed meeting tomorrow, Wednesday. What will come of it? Will it go up or down? Well, there will be a lot of trend-setting participation, and I think we'll be able to say more then, but at the moment, not much is happening. With a certain degree of probability, we've seen a higher low and are still in the trend. But I'll also say we want to be a bit fair here when it comes to bulls and bears. That's still our SMA 50 on a weekly basis. And we are now in a situation that has never been seen before in this bull market. We have always been above our Bitcoin. We are in the fourth week, below the SMA 50 weekly. And that is, of course, quite a bearish sign. And this bearish sign stands, I'm happy to repeat myself, relative to what I have said in recent weeks, to all the liquidity that is currently being pumped into the market. So the rising US indices, we just saw it on the ticker, NASDAQ and S&P and Dow similarly, in conjunction with no more QT normalization, the cap being abolished, possibly QE at some point in the next few months, and in conjunction with not only that, the rate cut now in December, but if we possibly see a new Fed chair and the fantasy that he will make more moves and initiate more cuts in 2026, then that is actually the opposite pole that is forming here. And that would, of course, lead to us here, seeing the higher low or go up.
Let's take a look at the daily chart. Let's assume that 85,000 US dollars can remain as the law. What could the path upwards look like then?
Yes, if when we ask ourselves the question, what has to happen for us to be able to say that was a higher low, then you see the 85 here. Yes, that was the all-time high, and that was the 85. We've removed the 1 and the 0, and here we have the retracements. And what we've seen in the last few days, in the last 2 weeks, is basically this movement here. We saw a first counter movement that ended at 93,116. I had said that this could be a first, in the sense of the Elliott wave, a first count of 1. Then we saw the counter movement here down in the sense of a 1, a 2. And then last Tuesday, following our meeting, the short squeeze started right away, which we had also predicted to some extent. It went up, but it didn't break through the 93,116 sustainably, not even the next day, but fell back slightly. And since then, we've been in a sideways movement. So here too, we're waiting for the Fed's decision. It has to break through 93,116. So it has to break through there and then move towards the retracements. And it has to break through the retracements as well. And if you're wondering whether to enter the market, wait until this retracement has run its course, the last one, then you can be reasonably sure that it will continue to rise. Otherwise, you really have to wait week by week. Not necessarily hoping and worrying, but simply observing which direction it is moving in. That's the positive side, Joanna. The negative side is the bear flag, bear flag, bear flag, crash. And this can also be interpreted as a rising wedge, which has an 80% probability of moving downwards. This means that a great deal of bearish sentiment can be read or interpreted into this chart. But here too, the question remains, what is more important? Chart analysis, movement, or what is currently happening in the market, which we have summarized here. The US indices are driving the coins. We looked at the rattle as the first positive sign. Why? Liquidity is the only thing that matters. The Fed decides on the money supply, which we have discussed in detail. We have a falling DXY. No US dollar investment competition. That was our second positive sign. And the falling Bitcoin dominance implies that altcoins are really gaining momentum, while Bitcoin is moving more slowly. And that was our third positive sign. So it's opinion versus opinion here.
In addition to cryptocurrencies, we are of course also focusing on what is currently happening on the market. And we can see that in the Coinbase Bitcoin Premium Index. For example, it also shows who is currently more active on the crypto market, the Americans or the Chinese. And if the US is calling the shots, the whole thing could be fueled even more. What does the index currently indicate?
Yes, we had this Coinbase Bitcoin Premium Index last time, the first time around. We mentioned it on the audio track. I thought it was quite interesting to bring it up again. The statement is quite clear. When the price on Coinbase is higher than, for example, on the Asian-dominated Binance platform, then the demand for Bitcoin in the US market is simply greater, and thus for coins in general. And here you can see the swing towards Coinbase in green and towards Binance in red. This means that in the green phases, demand from the US market, which accesses the Coinbase platform, i.e. the typical US platform, was significantly greater. And in the red area, it was the Asian area. And here you can see an example of a really nice green phase. And what happens during this time, it goes up. Here we have a nice green phase and it goes up. Here you can see a red phase and it goes down. And last week we triggered a shift. And after quite some time, we are now back in a green phase. This means that interest from US private and institutional investors is rising again, and this could possibly be the start of a new movement. The conclusions, Johanna, that we must draw from this. The Americans are driving Bitcoin and altcoins. That's why it's enough for us in our interview series, and we say this again and again when we look at the US market in all respects, including the major indices, because they also have an influence on our cryptos. The Americans are re-entering the crypto market these days. Hopefully, I would say, why? The US capital market is simply crucial because it is the largest in the world and it has the Fed, which continues to control the money supply and through money supply control ultimately influences interest in risk assets such as these. You can read all about it at CoinGlass here at this link, where you can follow the developments.
If we were to classify this as a possible fourth positive sign, we would have to remain realistic and consider the other side of the coin in the monthly chart, because unfortunately, Oliver, the MACD is in the red.
Yes, I can't change it. I could now work a little on play with colors, but it is simply the way it is. We had a negative October with -4%, and in November we had already discussed everything. That is the long red candle with -17.5. And there is the saying that if November is negative, then December will be too. At the moment, December is actually plus or minus zero. Yeah. But the most important thing we have been taking away from here for weeks now is the MACD. And the MACD has turned down, you can see that here, in the red zone. And we said that when it turns down into the red zone, you're actually already in the first third of a bear market. So, that's the negative side of this whole story. Two things to note. Firstly, what happened in the past does not necessarily have to happen again in the future. That's one thing. But what really bothers me even more is, why is November so red? And ultimately caused this reversal of the MACD, especially in November. And what I just can't get out of my head is the fact that we had an eternally long shutdown.
The longest.
And during this shutdown, none of the liquid funds actually flowed, and we didn't just have a QT, but rather, I would say, an even stronger QT, which may have led to such a large candle. And I can imagine that if we hadn't had the shutdown, we might have had a red candle, but not to that extent, and we would have had a better chance, possibly now in December. An even better chance, possibly in December, of turning significantly green and then causing another reversal.
Yes, well, but that's all water under the bridge now. That's over and done with, at least for the next few months or November. Let's look to the future. Or did you want to say something else?
Yes, I wanted to say something positive. After this truly devastating monthly MACD, which has turned red, and historically we are now in a bear market, bull market. We have great news. As I said at the beginning, it's a shame that the crypto market these days is not driven by the great market news, and the crypto market is all about broadening its reach. And how do you broaden your reach? How do you get all these users? How do you get them excited about cryptos? These are the multipliers. And these days, two very, very big multipliers have decided to do something about crypto. Vanguard, the world's second largest asset manager with 50 million customers, has changed its strategy. Remember when the spot Bitcoin ETF came out, the head of Vanguard stood up and said, "Yep, this is nothing for our customers." He then left, and a former BlackRock manager took over as CEO. Now, Vanguard offers its 50 million customers third-party products, including BlackRock's IBIT, specifically Bitcoin, ETH, XRP, and Sol. And that's quite a hot topic, and of course it's just as great. Bank of America, the second largest US bank, 70 million customers, has now given its 15,000 wealth managers, i.e. its 15,000 sales employees, the go-ahead to offer their customers, and not just the high-value ones, to offer all customers a crypto portfolio allocation of between 1 and 4%. This means that things are now expanding, demand is being generated, and if the corresponding liquidity is injected, both in the private and institutional sectors, then that is again the money with which Bitcoins are purchased. Hopefully spot. And that will ensure that demand rises accordingly, and with it, the price. Great news.
But let's take a closer look at the altcoins. We already discussed Bitcoin dominance, and if it declines, that should actually play into the hands of the altcoins, at least those that come directly after Bitcoin, namely Ethereum and XRP. But you mentioned bear market or bull market again because you already said that. We have listed once again why both sides of the coin are entirely justified. We examine both sides, present the facts as neutrally as possible, and everyone must form their own opinion. You have formed your opinion based on the facts. However, that does not mean that you should take this as investment advice.
Yes, that is exactly what this page says. At this point, it is important for me to make a small cut. And everyone should ask themselves, am I still bullish or already bearish? To the best of our knowledge and belief, we try not to be one-sided here, but to highlight both the bullish and bearish sides. I have listed a whole host of indicators as to why we can and should be bullish, or why we can and should be bearish. And everyone can and should take this to heart. Not just listen to our opinion, but also seek out other opinions, form their own opinion and act accordingly, because at the end of the day, they are responsible for their actions, not us. So when some people say they don't know what they want because we talk about bearish and bullish, we do know what we want. So I've made my decision. I'm still bullish, and I think viewers are already fed up with it. The reason I'm bullish is the fact that we are now simply receive a great deal of liquidity from the Fed's measures at the various levels we have described.
When it comes to bullish or bearish, I am reminded of a verbal discussion we had over the weekend. You know what I mean, right?
Yeah.
On our Telegram channel, I will always write bullish and bearish in English while Oliver will write it down in German. We'll come back to the Telegram channel after we've discussed altcoins, but that's what was on my mind and I couldn't shake it off. Ethereum and XRP are the next candidates we're focusing on. And as I said before, if altcoin dominance falls, the next candidate is likely to benefit, and that is Ethereum.
Yes. The logic is, Ethereum needs to get out of its rut for Bitcoin's dominance to fall. If the 98th coin in coin market cap now doubles and triples in price, it will not cause a corresponding increase in its market capitalization, let alone take anything away from the big Bitcoin. But if the number 2 in the market performs exceptionally well, as mentioned at the beginning, and Ethereum is mainly responsible for the slight decline in Bitcoin's dominance, then it is clear what must happen. Here you can see the 3 green weekly candles. Sure, there was a clear downward trend, but Bitcoin also followed suit. It was a sideways movement in lockstep. Bitcoin and Ethereum went down. Bitcoin's dominance remained at this sideways level, but these days, Ethereum is just as I described it. When it goes up, it has 1 or 2 percentage points more than Bitcoin, and when it goes down, it still remains slightly in positive territory in some cases. So it's a great story, the big picture. Yes, I can only repeat that it's this range between 2,000 and 4,000 that we've had since the beginning of 24, i.e. for 2 years now. You can see that it really is a range. Investing in crypto means enduring endless ranges, only to then to make our hearts leap when it goes up. We can see that we are still, let's not kid ourselves, right in the middle of it, but already above the psychologically important $3,000 US. We had a slightly negative spot. ETF week, but overall we had a positive price week. What is important is that supply on the exchanges is greatly reduced. This applies not only to Ethereum, but especially to Ethereum. And what I think is really, really important right now is not to be misled by that. The pump is getting ready to go. Bringt sich in Stellung. So the guys who are probably saturated with Ethereum and of course talking up Ethereum at every turn in various interviews, Pump Gang are positioning themselves. First and foremost, of course, is Tom Lee with the largest treasury. But there are a few other specialists who, when they talk about coins, talk primarily about Ethereum, and in such phases, they can talk themselves up, which is what they do. And that ensures that when it finally takes off, Ethereum may have a corresponding tailwind, because private investors sometimes follow one influencer or another.
With XRP, the absolutely positive news is focused on the spot ETF. It has set some impressive records, but here too we are at number 3 in the coin range with Ethereum positioned in the middle. And with XRP, we can see that we have currently reached the lower end of the range, which you can certainly classify as positive when you look at the further course.
Yes, that's why I wrote it here. XRP is still doing what it always does. You already mentioned that we had a great launch of the spot, and we've been waiting a long time for the XRP ETF. It's breaking a few records. Highest trading volume on the first day. We've already discussed that. 16 positive days in a row, not a single outflow day, 16 positive days, and it will be the first, it will be the spot ETF from the crypto world that has reached 1 million the fastest. These are great things, and it doesn't matter how the records turn out, they're there. What's the bottom line? The bottom line is that the interest is there. That means institutional private investors are interested in buying XRP. Nevertheless, it's doing what it always does. It goes up, it goes down, it goes up, it goes down, and now it's important that it stays in the range between $2 and $1.80. And from there, based on what we actually expect, then it will take off. But Johanna, it's just pointless to look at all these charts, the Bitcoin chart, the Ethereum chart, or the XRP chart, because at the end of the day, one thing is crucial, namely what happens tomorrow, namely the Fed's interest rate policy and monetary policy. That will push it in the right direction, and the worst thing about the whole story is that is then no justification or great logic. Or it's Jerome Powell who throws in 2 or 3 words in his press conference that are received negatively or positively by the market, which then cause the thing to go down or up. So, I'm sorry to say, but as I said at the beginning, we are not dependent on the great news we have and what is happening in the market. Vanguard, Bank of America, Superspot, XRP, ETF launch, but we are dependent on what Jerome Powell says tomorrow. Tomorrow says, and we know that the Fed is independent of the US government, but above all, dependent on the US banks, which all have a stake in the Fed and the people in the families behind them. I can only repeat that this is not an independent organization, even though it is highly respected around the world, and it will be interesting to see what they have in store for the capital market. These days,
I don't want to be critical again, but I can almost see the long faces already. If Jerome Powell doesn't say those 1, 2, 3 words tomorrow, as we hope he will. We hope so, of course, and we will definitely be following it. Tomorrow evening at an ungodly hour. But that means we don't need to classify the actual direction of the coins just yet, do we?
We can wait and see what happens today. Tomorrow evening is 8 o'clock, 8:30, something like that. I believe the decision regarding interest rates will be announced at 8 p.m., followed by the press conference at 8:30 p.m. That's why we don't need to spend a lot of time discussing what could happen there. Let's just wait and see what happens tomorrow, and next Tuesday we'll summarize it.
At the very latest.
Smiling or crying.
Or beforehand on the Telegram channel. We look at the schedule that you always bring with you. It's about the schedule. Yes, it's also about the sequence of events, but it's actually quite a challenge to organize this sequence of events. Primarily, of course, it's about the direction, what's coming up, what follows when one thing has actually been ticked off. You took a minimalist approach to the schedule today, to put it that way. You can't make Schwenke happy with that now. I already did that today. I had an interview today with Borussia Dortmund, or rather with Lars Ricken, and there is at least one person in this trio here.
Yes.
But one of the three here has won my heart. It wasn't yours and it wasn't mine either, but I've already made Schwenke happy today. Let's just leave it at that, the interview with Lars Ricken and the continued existence of BVB on the stock exchange. You can see that in another interview. I'm curious about this minimalist approach you've changed here in the timetable.
Yes, it has already been mentioned several times in this interview that nothing really happened last week. This was particularly evident in this week's Bitcoin candle. Long wick, long fuse, hardly any body. This is a typical sign that the market doesn't know whether to go up or down, so it stays in the middle and swings back and forth a bit. And we have seen some manipulation where it went up to $3,700 and then down again, sometimes in one direction, sometimes in the other, so that the market makers had fun fishing for shorts and longs leverage. In that respect, not much has happened, so I haven't changed much, except for the date, of course. I changed the story in the upper section. The first one was our Russell. We discussed this in more detail in today's chart. I think it should just break through 2,568 or 64. It should go above that and really set an all-time high, somewhere between 2,600 and 2,700. That would be great. That was our first positive sign. The second was a falling DXY. And what I changed on this page, I already made the D green in the strong hope that the DXY, as indicated, it has written a lower high, possibly forming a bear spot there and then falling down, that we are well on our way to being able to make it green. Otherwise, we talked about the rollover of dominance. It's not entirely clear yet, but I think with a little imagination, you can imagine how that might continue there. But I would like to point out one thing at this point. The most important word on this entire page is this one. That's where the music plays, the liquidity, the monetary policy of the Fed. What will it do with interest rates? What will it do with the money supply? How will it work with QT? How will it work with QE? What will it do with repo? How will it pump money into the market? This will have an impact on US indices. And just like in the champagne glass pyramid, this will then trickle down to our coins. And hopefully we will see a recovery after the higher low, which we hope to see at 85,000. We will have a relief rally, which may then continue towards our targets. Not much has happened with our altcoins yet, except of course that ETH has jumped up, has already reached an all-time high, is doing quite well at the moment and could at least reduce Bitcoin's dominance, if not threaten it, which would be a very good sign for our altcoins. I can only repeat myself, we have quite a few questions in our crypto insights. I stand by that. When the market goes down into a bear market, we're really talking about percentages like that. These aren't
without exception. So no scribblers, no news that could change anything with ETFs and so on.
No matter how good the news is, if we enter a bear market, if we go down, then XRP will also correct significantly in this area, just as Emerson or Cisco did at the time.
Let's talk about last week. We already mentioned Crypto Insights, our joint Telegram channel, where we post additional information that didn't fit into our interview. That information is available there. And as we just discussed, for example, tomorrow's Federal Reserve press conference will of course cover all the exciting developments, but it will also be addressed repeatedly in the Tuesday interviews. We have a lot of demand and questions regarding this channel. We both have a lively exchange with each other, as we mentioned earlier, and we enjoy doing it and have fun with it. 24/7 is a challenge, but of course we are happy to take it on, to actually want to and be able to offer our community what we set out to do here. For €19.90 per month, you can subscribe to this Telegram channel, which can be found at www.crypto-insights.da or .com. What has your experience been like? Apart from our discussions about what to write, how has your week been?
Yes, we had the ambition to do something between Tuesdays, yes. And further videos are not feasible in terms of the effort involved. That's why we decided on written form, and the Telegram service was the obvious choice. When I got into the whole crypto scene when I was 26, I already had a blog, the Daily Crypto blog, which had quite a good readership. I always had between 30 and 40,000 people reading it worldwide. I always blocked out the time between 11 and 12 in the evening, which of course caused quite a lot of stress in my private life.
Okay. Yes, I can imagine that.
One day turned into every 2 days, then every 3 days, until it eventually became too much. So I knew that if we went down this route and set up a Telegram service, it would be hard work. And as you said, 7 days a week, 24 hours a day, you have to be on the ball all the time, even more so than if you were just preparing for Tuesday. And yes, we aim to deliver 6, 7, 8 posts per day. And what I can say from my initial experience is that these price movements naturally relate to daily events, especially in such heated phases as we are currently experiencing. It is not possible to examine 2 or 3 individual coins in detail on the side. This can be done in weeks when there is less going on. Today is not like that. As I said, it's hard work. I have to say there were also discussions about the price. And as I said before, I stopped working in 2016. And when you stop working, you actually know how to manage the rest of your life financially. And fortunately, that's the case for me. So I'm not doing this to make a fortune, but because I really care about this. I'm just blown away by the feedback we've received over the last 2.5 years, with 150, 160, 170, and in some cases even 200,000 views on our videos, and above all, the positive feedback. And that alone is my motivation to do this whole thing beyond the videos, to basically help people invest in cryptocurrencies, to do good business as far as I can. Of course, I could just lie there. There's no question about that, but I make an effort. Yesterday evening, I revealed in a post what my portfolio consists of and how it is structured. And so, as we said earlier, it is a good blueprint of how someone thinks. As an investor, you don't have to adopt this way of thinking. You can also consider other ways of thinking and then ask yourself how you would decide. And that's how you should see it. It's hard work, as you said, but the first week was great. It was lovely, and I had a lot of fun.
I can only confirm that and return the compliment to you and also to the community. I thought you worked at tokentus. Have you given all that up now?
Right, I'll do tokentus at night.
Now, of course, viewers will say, oh, Mr. Michel, please take care of yourself. Of course, I'm part of it, but I can only confirm that. It's fun. Above all, it's fun to keep bringing things up and seeing what's going on, because that's how things move forward, and we complement each other, exchange ideas, and of course, stay up to date. Accordingly, I'm excited to see how the next few weeks will unfold. how tomorrow's FAT session will actually turn out. I'll be watching the Telegram channel with popcorn. Yes, I've already survived a few. You ate popcorn while watching. Oliver, thank you for today.
You're welcome.
We are writing this morning and we'll see each other again next Tuesday. Dear viewers, we naturally hope that you will join us. If you are interested, visit www.crypto-insights.de or .com or simply tune in again on Tuesday. We look forward to seeing you on any channel. This program was brought to you by Next Assets. Crypto, simple, secure, direct.